know, Outsourced CFO is an entity that works with SMMEs and ambitious companies that are looking to scale, that are looking to grow, and that are looking to take their businesses to the next step in the path. My name is Ayanda Vabaza Mvandaba, and I will be your MC for today's Scale Up conference. We have an exciting afternoon packed with a whole three speakers that will be talking about strategy, execution, people, cash through storytelling. We will have polls throughout this afternoon, and this is how you access the polls at the bottom of your screen on the right-hand side. You click over there, and then step 2 will be clicking on the poll. Our first speaker is going to be Nick. Nick is part of our sponsor company, Scaleup company. That is a specialist growth partner that works with various businesses across South Africa. Nick is going to be talking about strategy and execution. He's got an impressive track record of working with businesses, of founding businesses and growing them to scale. He's founded and worked for and with 3 businesses, but he will tell us a bit more about his story. Nick, if you could join the stage.
Thank you so much, Ayanda. Let me take over and share my screen. Does it work? Yes. Thank you. Thank you. Hello all. Thanks. As Ayanda alluded, I've been in the trenches of scaling multiple businesses across Europe and South Africa. And today I want to show you how the scaling up methodology that we are working with can help you grow your business without losing your mind. Like 15 years ago, I scaled my first business a bit too fast. It was an e-commerce company 6 years after the dot-com bubble burst. And while the numbers look great, like we had amazing demand, we had investors, we had journalists calling us almost daily, but the inside was looking like chaos. Like I was waking up every morning with anxiety, my team was really lost, and I was exhausted, and we had no system, and we're just hustling. And I learned over and over across every business I built, scaled, and turned around that businesses don't die because growth is a problem, but because it's unstructured growth that kills great companies. Like 2/3 of scale-ups plateau because of internal chaos. The strategy becomes unclear, the accountability among leadership drops, and as a founder, we tend to pick up the slack and start firefighting more than leading the company. And when you cross like 30 employees or so, then the team alignment drops significantly, and that's where the real challenge begins. Like halfway through my journey on that company, I ended up with a real burnout, putting me out of business for more than 3 months. Sounds familiar? Like many founders grow fast, only to feel the wheels are getting off. Growth turns into a complexity and leadership teams lose alignment, and that's where we often come in a scale-up company. Like one example, like one of our clients came to us in crisis. They had doubled revenue over 2 years, looked really great, but there was chaos everywhere. The strategy changed all the time, leaving the team unfocused and the founder overwhelmed. And within 9 months of working with them, like we helped them to align the team, to simplify and scale profitably again. And similar things like that we hear regularly when we work with companies. Like the building a business that's really ready to scale is a big achievement already. But when it gets why does it always get messy so often? Like when you're growing without a solid structure, the strategy gets fuzzy. The people feel disconnected because there's a mix of old people who built the company to say 20 employees, and then there's a new culture coming in from experts that you hire around 20, 40, 50 employees. And that creates a disconnection between both parties. Like both have different cultures and different backgrounds, and they need to be actively aligned, and otherwise you're sort of winding your company up in trouble and struggles between them. Thirdly, the execution loses focus if it's not actively managed, because with a fuzzy strategy and changing direction, execution needs to be very, very clear in order to remain effective. And if that's not effective and not clear, then there's a lot of waste coming out of the organization and a lot of lost potential. And lastly, with growth, the cash flow gets a whole new importance. As we all know, like out of growth, not necessarily cash comes, but growth also eats cash. And you need to make sure that the cash flow is under control here. We see these patterns in most high-performing companies just before they get on a major scale-up journey. And to address that, every business that wants to scale needs to address like 4 critical dimensions. And whoever of you have read the book Scaling Up or seen it before, those 4 dimensions are people, strategy, execution, and cash. They sound simple, but getting them right is really anything but easy. But at the same time, when you see them in conjunction, they are actually everything a business has and needs to define. All of these dimensions have a series of important facets. But like when we work with companies, like we always start with a provocative question to set the bar really high at where it should be. For example, on people. Would you enthusiastically rehire everyone on your team? When I talk to people, to founders or leadership teams, I always get this unbelievable stare in their eyes. And like, what do you mean? Like some companies tell me between 20 and 60% of people they would enthusiastically rehire. But to be honest, why wouldn't it be 80? Why wouldn't it be 100%? Like it's our company, it's the founder's company, it's the leadership team's company that wants to scale. And you got to get your people together in order to make it properly and to have a stable scaling path. So getting that people dimension right is a very challenging one, but that question is the one you should ask yourself whenever you deal with people in the organization, whether it's hiring the right people or whether it's when you have people in, check in whether they're relevant to your organization, whether you can upskill them, train them, change their roles, just to make sure that everybody's sitting on the right position. It has to do with culture, has to do with hiring, has to do with people management. Get transparency about about those people that you have with you, and then getting a transparency about how do you scale the company. The most important thing is, if you talk about people, is often when we are stuck with people. And most companies, I yet have to come across a company where there's not a conflict in the leadership team even. And when you're looking at those conflicts on a level of now, it's really difficult to see whether the right people. But if you look forward, if you build towards a certain strategy, then you start to see better whether that person is maybe okayish now, but for the 3 or 5 years journey, that might be different. That's why strategy is so important. And the strategy question is, can your team state your strategy in 1 sentence? Most companies don't really have a clear strategy. Some companies have a clear strategy, and sometimes it's even aligned with the leadership team, but then it sits there. How about the rest of the company? Doesn't it make sense if you have a strategy that it's shared with everybody and that everybody knows where you're going? So that's the objective of strategy, having a clearly defined differentiator, what makes you different from all competitors, sharing that with your entire company and making sure that you're going into the same direction. Once that is clear, you execute. 95% of what your company is doing is execution. But how do you measure it? How do you make sure you execute flawlessly? It's a matter of KPIs. Are they driving the focus, or are they just reporting noise? Some companies have 0 KPIs we talk to. Some companies have 100 KPIs and they get lost in numbers. But having just like the important KPIs, knowing where to go and making sure the execution rhythm is so that you can execute on the strategy reliably, that is a big, big task and needs to be addressed if you scale from 20 to 50 to 100 or 150 employees. And then lastly, cash will be addressed later in this webinar here, but we pose the question, do you have 3 times the industry average profitability? Why that? Because industries have different profitability levels. It's hard to beat them really, but seeing what you can do in execution and seeing what we see in execution, how much waste is in the execution, how much disalignment is in there, and how many mistakes are made. If you get clarity of that one, if you get processes in place, if you get people clearly allocated and have clear accountability with people, then you can reduce the errors and mistakes and detours to a level where you can actually have a significantly higher profitability than your peers. What is scaling up to that? Scaling up is a system, not a silver bullet, and it's one of the growth systems that help you to grow systematically and to build a company that can scale. Like it aligns your team with purpose and strategy. It gives you rhythms and reinforce execution to make sure that the execution is flawless across scaling and across these departments. It builds a focused leadership team to focus really on what matters. Like we call that priorities and rocks if you have ever read the book. So just discarding the noise and making sure that you focus on what really matters at one time. And it also helps you to turn complexity into simplicity. How do we do that? There's a line of sight, as we call that. There's a long-term strategic thinking element where you define a BHAG. That's a so-called big, hairy, audacious goal, like a really big and great goal that you're striving towards in the next 10 years. And then you break that down through retrograde planning. Like, how does that long-term goal have to look like in 3 years and 1 year? And that 1 year is quite tangible, and you swear the leadership team towards that 1 year and develop that 1 year plan together with them. But that's still in the future. Breaking that down in quarters, that is planning, so you can always execute like a 90-day plan, quarter by quarter by quarter. And every quarter you look back on what have you done and what have you not done, and where do you need to put the next priorities. You walk through the years, quarter by quarter by quarter, always at the end of the year redoing your annual plan, which gives you the luxury of having an annual plan whenever you start a new year. So this is the system of having strategic thinking and execution planning in one line of sight, always looking all together to the long future so that everybody's aligned at all times. That's not theory. Like we've helped several companies in South Africa doing that, coming from survival mode to scale profitably. One Day Only is in Cape Town. Solar Africa is a solar service provider for B2B in Joburg, and Net99 is a big fiber company in Joburg. That was just a brief introduction what a scaling framework can do for your business. And scaling is not a solo sport. So if you feel friction or you know you're not quite where you want to be, let's talk. Like one conversation could already shift your trajectory into your growth. Thanks so much from this. I would say we're open for any Q&As you might have.
Thank you so much, Nicholas. Ladies and gentlemen, you're welcome to post questions or comments in the chat, and then Nicholas will answer those questions. Perhaps while people are posting their questions, I could ask you a question, Nick, if you're open. Sure. So you mentioned that you would be, you'd be looking at reviewing quarter by quarter by quarter, and sometimes I find that in scale-up phase of a startup, perhaps a quarterly review may sometimes be a little bit too late. How flexible do you think one needs to be?
That's a good question. Nowadays, the world is really agile and fast, and what is important to review your strategy regularly. So on an annual basis, you review whether you're really on track or whether you need to adjust. On a quarterly basis, you set what you are setting out as priorities for the quarter, and you have to execute on those priorities. And priorities are big things, like starting a new CRM system, like getting a new way of selling and like improving your entire sales process. Those priorities, they don't move within 90 days, right? And having them fixed and agreeing on them makes you actually only able to execute on them. You are still on from week to week, you meet with your leadership team, and you might actually react to really urgent initiatives. But if you do not nail down those priorities, they always get like taken over from those urgencies, and then you never get anywhere with the really important priorities.
Thanks, Nick. Just to clarify, asking the question, you click on the activities and the Q&A along with the polls that will be running throughout the event. Okay. There are questions there. There's a question there for you, Nick, from Anonymous. I don't know if you can see it.
I see one question from, how do you best understand the personal and professional motivations of an employee? Both is important. We need to understand whether the employee is fully motivated to do what they're set to do, right? So like if I'm the manager of an employee, I need to understand whether they're fully on and whether they are distracted by personal matters or not. So both is really important, and I think that having a methodology in the organization how to deal with employees is very important. We come across companies where some managers are natural in doing one-on-ones, others are not. Now those people that meet at the water cooler saying, well, my boss is helping me to move on. He wants to promote me. And the other one saying, well, I don't. And you cannot have an organization where people development is erratic and onto personal preferences or personal cultural backgrounds. And if you have proper one-on-ones, and if you're really interested in moving your people along, then you will know whether there's personal or business issues that are holding them back or making them flourish. There was one of the questions. Are there more questions coming in?
Yes. Can you see them, Nick?
No.
Okay, I'll read them out. I'll read one out for you.
Yep.
In your experience, what do you find to be the thing founders are most in denial about on their scale-up journey?
That's a good question. Most founders have a big challenge from being the creator of everything to later on let go, understanding that they have to surround themselves with really great people, and those great people can only work with autonomy. So being able to let go, delegate fully, trust fully, and by that instilling a culture of accountability and trust, which then cascades down to the next level, because those leadership team members, they have to learn and go through the same thing. And it's so easily done because you want to trust, at the same time you need to gain trust. But this is the biggest thing for founders that holds them back. We say the bottleneck is always at the top. So you are coining that culture, and then everybody else underneath is having the same challenge, and they need your help to do that. Anyone else?
There's one more question. What would happen if your accounting and finance functions are not built well when scaling?
That is true. I mean, first you come to this later. I think OCFO is a great company. Many smaller or medium companies cannot afford really great people on all the leadership levels, and that gives a dangerous situation. And finance is possibly one of them. And you can work with somebody like OCFO to have good people on a fractional time on it. But honestly, the question is true for every single function. I consider leadership teams as a chain together. Every single function is important to make the company successful. You can have the greatest marketing and sales and execution. If your customer service is so dismal that people are getting upset, you lose the whole traction from the beginning. Or if everything is perfect but sales is not good enough, then also the organization can't work. So we say the organization is only as strong as the strongest, weakest link. Right, and that is really important to make sure that you have a good balance of leaders at any point of time to drive the organization forward as a whole.
Thank you so much, Nick, and thank you for your time. There is a poll that the team is going to put up now. If everyone could please vote. Does everyone know how to access the poll? Okay. So poll 1 is, where are you in your business journey? Two more minutes for questions, if there are any questions for Nick.
I just saw one question. I mean, what size of companies do we consider as scale-ups? Like a scaling up is the phase that comes after a startup phase. And a startup phase, you throw many spaghetti on the wall and you try to figure out what works and what can you make revenue with. And once you have done that, and once you know that there's 1 or 2 or 3 products that are actually there to scale, then you can enter the scale-up phase and making more of the same. At that time, you have a crucial discussion with your team by saying, okay, we started with 6 products. Like, what are we actually focusing on? Because ideally, you scale 1. If you scale 5, you need 5 times marketing, 5 times sales, 5 times operations. It's really challenging. So a scale-up is a company that's able to scale around 1 or 2 products that have full market fit.
Do you see there's one more question there, Nick?
Can you read it?
What is the single best piece of advice you could give to a founder looking to scale?
Develop the vision and the strategy together with your leadership team. When I was a founder, at the best case, I thought I have a strategy, but I told them the strategy, they really didn't get it. But right now, we're developing the strategy together with the founder and the leadership team. It's completely theirs, which is the absolute basis for full accountability. You want everybody to be fully accountable, and we hear that every founder wants that, but they can't be accountable if it's not theirs, if they don't build it themselves. So sitting in the room, doing it together with them, and creating something that is a joint magic.
Thank you so much, Nick. Really appreciate your time. And thank you for the insights that you've shared. Okay, we're going to move on to the next part of our program for today, and that is my part. I will be talking to cash and people. And I'm lucky enough that Nick has alluded to a lot of what I will be speaking about. So yeah, I'm going to share my screen. And so I thought I'd leave my introduction relating to my experience to this part, just so that I can explain where I fit in. So yes, I'm a non-executive director at Outsourced CFO, but I'm also an entrepreneur. I left corporate back in 2018, 2019, and decided to figure out what's out there because I had this desire and this need to be in what I will call the real economy, making decisions that are impacting my clients, my staff, myself, and trying to build this legacy that I would love to leave one day. And so we also have a family business. And in that business, in the family office, we've got a couple of different businesses. And so some of the analogies that I will be using just to briefly speak about cash and people and why I believe that they are the levers that founders need to pull on in their scale up efforts will be are driven by my experiences, particularly in the fuel industry. And so what I've seen is that people and cash are two sides of the same coin. Both can be seen as an investment in a business, where cash is the fuel, but people are the engine that makes the fuel work, that makes things work in the business, that turns the business. And so I often say one cannot function without the other. Nick spoke about the importance of ensuring that your people and your team understand your strategy, but you develop it together, that you implement it together. And it doesn't take an approach where you are just talking the strategy at them and they just need to turn out the work. It's so important to have buy-in from your people because you cannot grow your business yourself. You can have cash and you can have the business, but if the people do not buy into the vision, then they cannot make the cash the fuel, which is going to turn the engine. So ensuring that not only is the strategy a robust one that uses all your resources and tools that are at your disposal, but ensuring that your team is empowered to make decisions that are best for the business. Your team is empowered to grow the business and they buy into whatever you are selling. So lever one will obviously be strategic cash management, right? Which effectively is about acquiring the right kind of capital and making sure that your funding mix is optimal for yourself and for the business. So obtaining the right kind of capital depends on where you are in the life cycle of your business. Whether that kind of capital, you've got time to pay it back, which could be equity, or you don't have to think about interest payments. You don't have to think about monthly repayments or annual repayments. It really depends on what kind of business you are, where you are in your life cycle, and what you have available. Lever number two will obviously be your people, your empowered people. And I often say that you need to look at the your monthly salary bill as an investment, and what is the return that you're getting on your investment, making sure that your people are engaged, skilled, and well led to ensure that whatever you're putting into them brings back something for you. They often say that strategy eats culture for breakfast. So you can have a great culture fit within your entity, within your business, within your teams. But if the strategy that Nick alluded to and spoke about earlier is not one that is robust and integrated into the culture of the business, then you will be found wanting. So what you also need to look at is what your staff turnover looks like. Are you able to return people, retain people? And that will also speak to the strategy and the culture within the business. Ultimately, you want to grow people and you would like them to move on from your business. But it's important that as much as the people that you are growing, especially a business like, if you look at a business like OCFO that has a lot of young people working there, you want to grow the people so that they can themselves grow into better employees, whether in your business or in other businesses. So the importance of leadership development then comes in here, investing in training for your staff, because outside of the salary, you also have to bring something else to the table. So what we have here is seeing the cycle of growth. So you've got the cash investment, which you then allocate to your salaries, your benefits, your tools, your training. You attract and you retain the talent, and then the talent is able to then work with you on your strategy, your innovations, and execute the strategy and the innovations that you come up with, ensuring that your team is empowered and you're able to create a good customer experience. And then that then leads to more cash that is generated within the business. So the four key takeaways for me basically are ensuring that the strategy is an integrated strategy in your business. Again, emphasizing what Nick spoke about earlier, using data to drive your decisions. So what is important in your business? Where is your business? What is the life cycle like? Which part of the life cycle are you on? What kind of capital do you have access to and is beneficial for your business? Then communication with transparency to your staff, to your people, to your customers, and making sure that your initiatives put people first, and that will be your staff and your customers. And then with your cash management, making sure that you allocate your cash to investments and initiatives and projects that then maximize your return on investment. So I will take any questions now, and then we'll also move into the poll. So question, what would you say is the more important function to concentrate on: sales, finance, and marketing? Before I went into business, I would have said finance. And then I went into business and I realized there's no finance without sales. That every single business out there is first and foremost about sales, whether it is a finance business or fast moving consumer goods or a service business, it's all about sales. So that would, for me, be the most important thing to focus on. But ensuring that all the other functions of the business are not found wanting. So how I would treat the staff in my business, I would say we are all salespeople first, because it's all our responsibility to grow our business. Okay, I don't see any other questions. Then there is a poll question. What's your biggest current scale up challenge? So Nick has a question. What is the best balance between outsourced in-house finance function or a scale up? So Nick, I would say I would first have to look at capacity. financial capacity and physical, mental capacity within the team, in order to determine what is the best balance between in-house and outsourcing. And where, in terms of your sort of 3-year, 5-year strategy, where do you need to focus your efforts as a business? So if you need to focus on sales, then there are things like finance that you can outsource. But I would keep things like marketing in-house if you are trying to drive sales. And that's just an example. Takalani says, what does cash allocation look like pre-scale, during scale, and post-scale? Sure, that's a good question. And I think as founders of startups, cash is always so tight that sometimes it feels like you're borrowing from Peter to pay Paul, and you're prioritizing things based on what is going to get your business going from month to month, right? So the cash allocation could look anything like prioritizing the very people that you have in your business to drive your business. So your employees, your staff members, the people that buy into your strategy, making sure that they are in turn empowered to then generate cash for the business. Pre-scale, that could look like prioritizing your proof of concept, your minimum viable product, and ensuring that that's bedded down, that your service is bedded down, that you're able to service your customers without glitches before you can scale. And then during scale, that could look like allocating it to technology that helps you work quicker, work faster, work smarter. Anonymous says, how can you make sure all the new people that you bring in don't change your work culture while scaling? Okay. So I think building your team, as you build your team, you have to ensure that everyone is an integral part of the culture, that the culture isn't necessarily coming from Ayanda alone. So if Ayanda's on the team, Nick is on the team, Sam is on the team, Tom is on the team, we all need to body the same, let's call it values, and culture. So someone else joining the team gets a chance to interact with a consistency within the team, ensuring that the culture is consistent.
Let me add to this, because that was actually
yes,
one
please.
question also to the people element. This is one of the most important questions if you scale a company, because if you don't intentionally coin your culture, exactly that happens. If you add people and you add people, it becomes arbitrary and it blurs out. And it's sometimes a scale up in smaller companies, it's sometimes difficult to understand the value of culture. But if you look at big companies like Google and Airbnb, those big examples, they are very strong. They are culture first, and they are there for a reason, and they are actually that big for a reason. So setting your culture intentionally and then making sure everybody is coming into that culture is extremely important if you want to be able to scale with halfway a piece.
Thank you, Nick. There's a really good question here. What's the biggest people-related blind spot founders face during the scale-up phase? And that's something that I've encountered. And after I answer, Nick, if you could also give us your take on this. So for me, it was thinking that I've got this amazing idea or a new business and I can bring my friends and family to work with me on this idea. And because I'm a founder, it's my baby, right? So it's okay that, you know, it's myself and my best friend and my aunt and this other person. But just because you love these people in your personal life does not mean that you need to work with them or that you can work with them. And I've seen that time and time again in my community of other founders. Nick?
Yes, can second that. While all other topics are also important, strategy and execution, but the people dimension is the single most important one. And what is important to understand, what I had to understand, is that you're not great or you're not great. Many founders are great at founding, at starting up, and then you become you need to become a leader and you need to become a manager, and you are not good at that. You have to learn it. The same is true for the others. So you're running a company, and at the one point of time, you have it built with some by then friends, maybe early friends, maybe then friends, and you have to, at any point of time, you have to judge, are they still up for the game? If not, can they learn it? And if not, then do you need a change? Do they need a different role? So sticking fast into what you created and being indebted to people, not being able to change and question that will absolutely limit the possibility for a company to scale, including yourself. Are you a good leader? If not, become a good leader. If you're not becoming a good leader, just take somebody else doing that job and get on a different role. Yeah.
Thank you. Francois was asking, when does it make sense to get a fractional CFO on board? I would say one way of looking at it, it could be when you've hit a ceiling and you feel you are struggling to scale further than a certain point or struggling to grow your business past a certain point. So it's important to get a different perspective, different type of person that could look at things with a different eye, because sometimes we're so much in the detail that someone else's perspective is important. It could also be a situation where internally you don't necessarily have the skills of a CFO, but you cannot afford to employ a full-time CFO. Then you would get in a fractional CFO without the constant payroll implications per month. And then also sometimes a fractional CFO is good as when you're trying to take the business in a different direction. Maybe you revise the strategy and you need to just do a complete overhaul or a revamp, whatever that looks like, then I would bring in a fractional CFO as well. Are we looking on time? We're still all right. Sumari is asking, what do you prioritize when you invest in developing your people? And how do you determine ROI on those investments? Sumari, what I always say is it's so important to meet people at their point of need because people are so different. And you need to balance the investment in the person with what they would like in order to see their own personal development versus what the business needs. And that could look like anything from leadership development, an Excel course, a secondment opportunity. It really depends on where the person is. Nick, do you have any thoughts on that?
Yeah, I'm just passionate about the people element, as you see. There's a fluffy dimension and a very specific one, and ideally they go together. Like you could sit down with a person, what do you want? What's really much more effective is if you really want to know where you want to go, get your organization to, where you want to be in 10 years, and in 1 year, you suddenly like, I need you to do this. I need you to become good at this. What do you need from me? Do you need a course? Do you need a book? Do you need time from me? Like, like once there's a tangible goal that is realistic, but ambitious, and everybody's striving towards that, then you can develop people into that direction. Everyone wants to grow. Everyone wants to grow, but growing into what you also need is satisfying that need for growth. And then you have a double whammy and everybody's happy with it.
Thank you for that. Then last question, Tom, what are the most important financial numbers you would pay attention to as you are scaling, and how important is cash when you're scaling? The numbers that I would pay attention to are, for me, first and foremost, your cash burn. How much cash are you burning through in your scaling? And you need to keep that finger on the pulse because things can go south very, very quickly. And then numbers like return on investment. So you're burning the cash, but how is it ensuring that there's a return on that cash that has been burned? What does it translate to in terms of sales? Or are you just, if you're putting cash into advertising and marketing, is it translating into sales? And then across the different businesses, different numbers are important. So in one business, it could be how does it translate into EBITDA? But in another business of mine, I have to look at literal liters being sold and not bottom line, because that is not how, it doesn't translate into my bank account. So it really depends business to business. And I think that's such an important part of where a fractional CFO or an entity like OCFO could come in, because it's not a one size fits all, but you need to be able to translate it into what works per business. I think the poll is closed now. And are we able to display the poll results? Or I think we might do that at the end, Nick. Okay, all right. So next we have Tom and Sam, the co-founder of Dojo Films. Team, if we could pull up those slides, please. Hi, Sam.
Hello.
Is it just you that's going to be having your camera on?
It should be Tom as well.
Okay, let's give Tom a minute.
Hello, everybody.
Hi, thank you so much.
Can you see and hear me?
Yes, perfectly.
Awesome. Give me 2 seconds. We're on the wrong slide. Cool. Hi there. So yeah, I'm Tom, co-founder of Dojo Films.
And I'm Sam, founder of Dojo Films, and I head up the creative department.
So what we wanted to talk to you guys about today is storytelling. Dojo Films is a creative production agency. And I wanted to start by taking you back to a moment from Web Summit last year. For those of you that don't know, Web Summit is one of the is hosted in Lisbon every year. It's one of the world's largest and most influential tech conferences that brings together founders, investors, media, and global companies. And Sam and I have been going to Lisbon every year now for about 5 years. There's a video here. It doesn't actually work. The sound is awful. So I'm not actually going to play it, but we can share it after this event. But in this video that I recorded, we were listening to some investors from the US. These were investors from a VC firm in California, and they were talking specifically about the importance of learning about the founders, about the people. And they were specifically talking about the fact that they're no longer just investing in product, but actually looking to invest in founders and the people, really understand who you are. The quote from this guy was that, excuse my French, being a founder is a fucking tough job, one of the hardest in the world. And what they want to really see is they want to know that the people that they're going to be investing in are going to be able to deal with the problems that they are likely to face. And if you can share your personal story and talk about what you've gone through in your own personal lives, that could actually go some way to helping secure investment and let them know that you're the right sort of person for the job. So yeah, so I think right now, there's a powerful shift that we're seeing in the investment world. Investors are no longer just backing businesses, they are backing founders. And they want to know when things are going wrong, how you're going to lead under pressure. And this doesn't just come through the pitch deck, it comes through your personal story, the way that you show up in content, the way that you communicate values, and the way that you build trust. So if you're building a business today and you're not putting your personality out front, then you're missing the opportunity to connect at the most human level with investors, customers, and even your own team.
There's sort of the intangible.
There's the video, which we'll share later. Over to you, Sam.
Yeah, it's bad showing a poor audio video as a video production company. But anyway, yeah, so that's why we're talking about founder-led storytelling, personal brand, whatever you want to call it. It's a huge opportunity for early stage founders. And it's based around a simple truth. When it comes to storytelling, no one connects with perfection. It's unrealistic, it's unattainable. What people connect with is authenticity. I don't know how much Stephen Bartlett has resonated in South Africa, but he's been, almost too ever present in the UK. He's everywhere, but he was an early adopter of this idea of founder-led storytelling and practicing in public. This idea that he has is embarrassment is the price of entry. We actually ran a pitch booth for founders at London Tech Week. And the question I was asking a lot of people, because they were having their opportunity to be filmed on camera and turn up and tell their story, was, are you willing to practice in public? I actually really didn't like using LinkedIn, presenting myself to the world. When we first started doing it in 2019, 2020, that took a while for me to adapt to that kind of mentality. But But Tom, we've been doing a lot of that sort of personal branding stuff for ourselves. So we're coming from a position of having gone through that process. And I think it's definitely sort of borne fruit for us, even though we've had to adapt to the idea of it.
Yeah, I mean, we first started doing it actually probably, we were actually, both Sam and I were in Cape Town and bumped into a guy called Renier Lombard, fellow who's a South African. He runs the FDC agency. He sort of got us into it and was kind of a big promoter of just, yeah, getting yourself out there. And we've continued to do that. And it has worked wonders. There's two other faces here that may be familiar. Again, apologies. Sam and I are both dialing in here from London. I expect Gary Vaynerchuk will be somebody that everybody knows. And Alex Hormozi is the owner, founder of acquisition.com, becoming a very, very famous face in the world of business these days. And these guys are, you know, these guys are huge on building in public and their personality. You know, I think what they're proving is that personality doesn't just drive engagement, but it actually drives valuation. And yeah, I mean, Alex Hormozi is somebody I take a lot of inspiration from. He's been building his business by relentlessly showing up on video day to day. And the same as Gary V. And Sam's actually recently been to an event and seen Gary V in the flesh, and took away a couple of key takeaways that I think he'd like to share.
Yeah, I mean, I feel like we're going to be seen as these two Brits who turned up effing and blinding. But the thing he said over 50 times when he was on stage, and he was only up there about 10 minutes, was "It's fucking free." And he literally, that was his catchphrase, that was his mantra. But he's not wrong, and he explained in a bit more detail why that became his mantra. And it's all based around the algorithms changing, and they're really promoting authentic stories and pushing it towards your niche audience. So you can find your audience without having an audience already through the algorithm.
Yeah, I mean, I think the point we're trying to make here is that you don't need a slick marketing strategy to get started. You just need a phone and a voice and the willingness to be seen. And every time you show up, you're building brand equity, and not just for your business, but also for yourself. And going back to the reference to Web Summit earlier, that's what's going to stick in the minds of investors, customers, and also recruits for the business. I did want to just drop in here some more familiar faces of bigger businesses, because this movement to founder-led content and showing personality and putting faces at the front of business is not just something that is relevant for early stage companies. This is something that we are seeing in some of the world's largest organizations. We've got three here, which I'm sure you'll all be familiar with. There's only probably one other person who we thought might make it onto the slide.
Yeah, we flirted with putting someone with an orange complexion on this slide, but we decided not to, because we're staying within business. So anyway, we wanted to share a bit about some of the customers we have been working with, because at the end of the day, our core business is working at a slightly later stage with seed-funded tech companies. And we've had the privilege with working with some amazing SaaS companies doing really high value work, you know, 6-figure projects in Rand. I don't know the exchange rate, but 7-figure maybe. But, you know, Parloa raised 150 million. They refocused into customer stories and a statement from the founder talking about the realignment of their strategy. Navan raised over $1 billion. Storytelling was essential around their scale and ambition through their leadership team. SumUp now at Series F, not just product features, product releases, brand awareness campaigns, but also customers, their values, their corporate culture journey. So even companies that are really at this late stage, getting towards IPO level, are really leveraging this, you know, founder-led or leadership-led storytelling. And I think they recognize the fact it builds momentum, it builds loyalty, it builds differentiation. And it all starts with the founders or the leadership team showing up.
Yeah, and a little bit more on what we do at Dojo. We've talked here about you know, thought leadership content and putting yourself front and center, and that works really well for early stage founders. cash can be limited. You don't have a marketing team to lean into. And as Sam said, at Dojo, we're actually working with businesses that have gone on that journey. You know, we're working with businesses that have gone through IPO and are now publicly listed. But what I wanted to do here was just run through some of the things that we've learned from creating this kind of content across the multiple growth stages. The first learning here is that thought leadership is not ego. It's about value. It's about translating your internal vision into something that the world can get behind. Secondly, customer success is content. The best growth lever that you have is a customer telling the world what your product did for them and the founder reinforcing the why behind it. Sam and I sell an awful lot of customer success videos to our various customers around the world. And we even produce our own. If anybody wanted to check out our LinkedIn profiles after this, you'll see that we actually just shared a new customer success video yesterday with one of our customers, Sitecore, talking about the sort of experience that they've had with us. And that's the kind of video that's really engaging right now. And finally, storytelling is differentiation. In a category where everyone is promising AI-powered automation, the only thing people remember is why you care. And we've seen this across clients when the founder's voice is present. Trust goes up and conversions follow.
So authenticity is your moat. And I added to this actually, and your brand is your castle. And then I got very lost in the analogy, and I had to delete a lot of what I was going to say because it was too deep in the analogy of this sort of medieval theme. But essentially, BBH, a huge agency, global agency, advertising, ran a campaign for Levi's decades ago, and the creative became their logo, this black sheep. And I think what we've been talking about has brought us to sort of believe that this is becoming even more relevant in the AI generation. You know, it's the elephant in the room. AI generated content is everywhere. Can you tell it apart? But there are, you know, blogs, product pages, investor updates, everything is becoming sort of homogenized when people can just create AI generated content and push it out there, and people don't know what to believe, who they're listening to. But our feeling is that this is really something that can't be copied. It's your authenticity, your voice, your quirks, your vision, and that becomes your moat. And obviously within that, I don't want to go down the analogy route too much, but essentially it's the first thing people see. And it not only does it provide protection for what you're building, but it also filters your audience. So you can lower the drawbridge to whoever you want and show them around your lovely castle, but your moat is creating, I'm going down the rabbit hole, your moat is creating this amazing ability to filter and get the right audience for people who actually care about what you're talking about. So your story is how you stand out, and it's something no one else can replicate.
Thank you for that analogy, Sam. Just trying to change slide here. Yeah, so what does this look like in practice? I think it's quite simple. I think whatever business you are in right now, think like a media company. You don't need to be on every platform. You just need to show up consistently. That might mean starting a founder podcast, sharing raw videos on LinkedIn, shooting video content quarterly that you can then spread across different channels. And as Sam has already said right at the beginning of this, you don't need to be perfect. You just need to be present. And if you don't trust what Sam or I are saying, then go and check out Stephen Bartlett and Alex Hormozy and Gary Vaynerchuk, and they'll all say the same thing.
But you also need good audio, as we showed with the first video that we posted and wouldn't even play.
Yeah, don't post a video with bad audio. That is true. But yeah, I mean, look, Hormozy puts out about 20 pieces of content every single day. None of them are perfect, but it's effective. Why? Because he's the only face that I ever see, because he's just flooding the channels. But it is valuable as well. And visibility does create trust, and trust creates opportunity. So think like a media brand, show up regularly, and be imperfect. We thought we'd just finish by giving you some actual sort of practical things that you can go and do tomorrow. And again, Sam and I have done this ourselves. So if you want to talk to us further about this on another call, feel free to reach out. But what can you do to start building a founder-led brand? Record one short founder video this week. Share a belief, a customer story, or something that matters to you.
Interview a customer is one of them as well. And the customer stories people get wrong so often. And really, your customer story is all about your customer selling your offering better than you ever could. And people try and make it about them and have their logo everywhere and make sure your product is shown. It's not about that. It's about your customer saying, my life was made so much easier when I started working with these people. And you need your potential customers to see themselves in your actual customers. And that will get you a long way.
And if you're thinking that video is maybe a little bit step too far, you're too busy, then a really simple thing that you can do tomorrow is just write a post about why you're building what you're building. The key is to just get started, get comfortable being seen. I mentioned Renier at the beginning of this call, a South African that influenced Sam and I and what we're doing on our journey. One of his favorite quotes that he repeats is, or I've been asked many times for the founders, well, what do I do? How do I do my first post? How will I know if it's right or not? And Renier just said, just post 100 times, just post every day for 100 days, and then you'll be ready to do your first post. So the key is just very simply get started.
So yeah, to close up, I mean, really the message is products can be copied, but stories can't. Investors back people, customers follow people, teams believe in people. Nicholas was very, focused on people as well. And from a storytelling perspective, it's the same. We explicitly decided not to focus on brand or product storytelling for this session. It's not that it's not important, and do reach out and chat to us if you're interested in that side of things. But we thought it would be way more interesting to look at this incredibly accessible, underutilized storytelling vertical that algorithms are providing an incredible platform for. So as founders, your greatest asset isn't just your strategy or your product roadmap, it's you and your passion project. Your story is one thing your competitors can't replicate. So I guess a direct question to each of you is, how are you turning up and telling it right now?
Thank you very much.
Thank you so much. Thank you. Sure, that was actually really insightful. I think a struggle for me in my journey has always been this belief that the work will speak for itself. And over time, I've come to appreciate the importance of storytelling, because if you don't share the stories, then the people won't know about the work. Yeah, so there are some questions. I don't know if you can access them.
I've got one from you, Ayanda, which I'm happy to answer.
Thank you.
How do you balance thinking like a media brand and not being too cringe? At what point should a founder consider a brand consultant? We actually did a public speaking course. Hopefully you can tell in some way. A lot of it at the beginning was getting rid of your ums and ers and likes and you knows and anything like that, but it's also finding your own personal style. And we had a whole session on like the cringe factor, and the way they described it was essentially, it's like we were talking about, there's this muscle memory to just talking about what you do and why you're passionate about stuff. And that will take you over the hurdle of being cringe about it. You may find sometimes if you're pushing yourself, you go too far and then you think, oh, that's not really me. But over time, you will find a place where you're just really comfortable. People who write say they wrote 3 books before they really found their voice. Like it's the same thing. It's just do it. And you may look back in 3 years and be like, oh, that's really awkward, but it doesn't matter. It's gone. The attention economy says no one cares anymore. So that's why we're saying just go out and sort of get going.
And you're building an audience as well, right? And so, tomorrow you post, no one's really going to read it anyway, probably. There's another question here from someone, which I think is really good, which is, if you were to give a scaling founder 3 questions to answer in their content, what would they be? Trying to avoid spam joining the chorus and talking for the sake of it. My advice is, before you do start speaking, you need to think about why you're speaking, right? So the questions, what I would actually suggest to the founder is, what are you trying to achieve right now? Are you trying to raise awareness of your business? Are you trying to seek investment? Are you trying to hire people to join you, and therefore you want to demonstrate and showcase, what the culture of the business would be like by showing your personality? So I think you need to first ask yourself what it is that you are trying to do at the moment, and then think about who is that person that you are trying to target. Okay, so right now I'm looking to hire some people. I'm looking to hire young, enthusiastic salespeople from South Africa. Okay, now the questions that I should be responding to for content should be related to that specific thing. And off you go.
I think a really interesting use case we had was on another session we were doing. Someone asked the question, she had built this app called the Endy app, which is for what's it called? Endometriosis in women. And she essentially said whenever she posts, her post would get quashed by the algorithm, because if you have the word period or other female hygiene words, the algorithm reduced them because it saw it as a naughty word. And we actually had talked to her afterwards, and we advised her around that should be your passion project. Talk about that, and you'll have loads of people engaging with you, how ridiculous it is that you can't talk about simple female hygiene within, an online platform.
Mm. There's another question. Am I good to read? Just keep reading these off. We'll go take one by one. There's one here that's the question is, how can you use storytelling to access markets globally? This is a brilliant question. It's something that we do at Dojo Films. Sam and I are in London, but we sell into businesses in South Africa. We sell to businesses in the US and Germany, France, and so do the customers that we work with. The answer to that really is localized content. If you want to resonate, let's just say for argument's sake, you're in South Africa and you want to sell into Germany. Germans are not the same as South Africans, right? What makes them laugh, what makes them tick will be different to you guys. I remember watching some adverts recently about the white vans that fly around South Africa like madmen on the motorways, or the fact there's no traffic lights on and off permanently all the time. These sorts of if you run those ads in a foreign country, they're not going to land. No one will understand them, and they won't care. And vice versa. Things that happen in Germany don't resonate here. So the beautiful thing about storytelling is that you can think about the market that you're trying to sell into, and then think about communicating a story that resonates with them. And that can be as simple as to just, you've got a customer, you're a South African business, but you've got one customer in Germany, you want more. Go and do a video with the German customer, get them talking about it. They speak German, they're in Germany, and then you use that piece of content and that story to share with more people in Germany. Or if you don't have a customer in there, you can make a piece of content using stock footage and pay a German voice artist to speak it. It can be as simple as just changing, the text, the subtitling into language, or using tone of voice. But the key really is to make sure that the story lands well in that local culture. So speak to people in the place that you're targeting. But I think it's probably one of the most powerful mediums you can possibly use in order to open up new markets.
And I think one of the biggest fails we see so often is American companies, where a tech company gets to a certain size, they tend to re-HQ in America because that's where the big money is. But then they have all of their budget assigned from the US, and they just say, we'll make a US piece of content and then localize it to all the other countries. We'll just slap some subtitles on and off it goes. And it's really not helping at all with them ignoring the rest of the world, essentially, by not making authentic storytelling content to resonate within those independent markets. I think there's one more question. Did we answer the one, anyone advice for someone in sales?
Sorry.
So how do you go about building trust on LinkedIn without being salesy? I think this is one we've grappled with a lot, because LinkedIn is our biggest platform and we do want to sell on it. So how do we sell on it without selling and being salesy? I think the main thing we've found is educate. we've learned a lot of stuff. It's what we're doing on this. We're not looking to get anything from it, but things may come from it, right? And on LinkedIn, it's the same. We send outbound videos directly to people when we notice that they've made a video, we thought it could be better. We're aligned with what they're doing. They've just got investment and we think their team could benefit from new video collateral. We reach out for a reason, and we start with, hey, we've noticed you're doing this and we think we could provide value. And then we can go on and be a bit more self, but it's always based on a solution or a bit of value that you can give.
I think what I would add to that is that, you know, the what can you give to the platform rather than what can I take, as Sam has just said, is the most important thing. But what I would add is also just be you, be authentic. There was actually another podcast which featured Alex Hormozy and Stephen Bartlett on the same show, and they were talking about this, and they brought something up called the 60-20-20 rule, which is you don't think about trying to appease everyone when you're making this content. The sweet spot is to make content that 20% of people will hate you for, and 60% of people will be indifferent, but there'll be 20% of the people that will love it. And that's the audience. That's who you're selling to. Those people that love it, that resonate, that feel something. They're like, I like this person. And for every person that likes you, there'll be someone that doesn't like you, but that's what you want. I mean, that's pretty much the only way to stand out as a business. If you try and sit on that fence and sell to the 60% of indifferent, you won't ever make a sale. So don't worry too much about it. But
and you also find that people, the posts you do where people disagree with you are the posts that get the most
attention.
Thank you so much, Sam and Tom.
Thank you, guys.
Really is so great that we had you talking about how to incorporate storytelling in the work that we do. I think it's such an important part of what founders events aim to do, which is bring together founders and entrepreneurs and share some of the unique challenges that we face in scaling, in making sure that our businesses are sustainable, that they can grow, that they can become global businesses. So thank you, OCFO, and thank you, Founders Events, as well, for the opportunity to grow. There's a new poll that has been posted, if we could have a look at that. And then I just want to encourage everyone to follow Sam, Tom, Nick, myself on LinkedIn, connect with Outsourced CFO, connect with Scaleup Company South Africa as well, and see how we can grow this community of founders so that our businesses can be sustainable, they can be future fit, and they can be global businesses. Thank you so much, and enjoy the rest of your day, everyone.